Hello, welcome back to Business Finance Made Simple with Melissa Silber. This is my second episode. This one is going to be talking about something that I think is very relevant to today's business landscape, and that is the difference between an employee and a contractor. Traditionally, employment has been the gold standard. You want to find a company, you want to work for them, and they pay you a salary or an hourly wage. They remit your income taxes off of your paycheck and submit those to the government, and you get whatever's left over. So that is typical being an employee. Once you go over into being a contractor and you are no longer their employee, they are not concerned with the tax you're paying. They are paying you a lump sum of money, and usually there's sales tax charged on that, but that's not income tax. As a contractor, you would bill them however much per month for your services, and you are then responsible for remitting taxes for your personal self-employment income at the end of the year. And you are considered to be a contractor to that company. Number one thing I want to highlight here, you deciding whether you are a contractor or an employee, or the company you're working with making that determination about whether you are a contractor or an employee, is not a decision that is yours to make. What I mean by that is the CRA or the IRS at any time can come in and assess the working situation that you have and determine whether you are actually a contractor or an employee. A lot of times they'll look at the professional fees category, because that is typically where professionals who would otherwise be perhaps C-suite executive level employees of the business are actually being paid as a contractor. The tax authority can come in and say, no, the arrangement you have here is one of employment. They need to be on payroll and you need to be charging employment income taxes and giving them to us, please. So they are looking at the contractors currently working, and they want to make sure that the work that you're doing for that company does fall into the contractor criteria. For the CRA in particular, how they determine whether you are an employee or a contractor, they look at 5 different criteria. The first one is control. Who controls the work that is being done? If the employer has full control over the work that's being done, when it's being done, how it's being done, that would lend itself to be an employment relationship. Whereas if the contract is for a straight deliverable and the business that's getting the work done doesn't care how they do it, it's just this deliverable by this date, and it's a set price, that would be a contract. The second factor they look at is the ownership of tools and equipment. If the contractor is actually using a business paid for laptop, they're at the office that business pays for, all the tools they're using to do their job are actually owned by the corporation, that would lead the CRA to say you are actually an employee. Whereas if you are an actual contractor, you own your own equipment, and the business you're working for does not have to provide you equipment to do the job that you've been contracted to do. The next criteria that the CRA will look at is the chance of profit and risk. Who is at risk in this scenario? An example I would use for that is if you are an employee of someone and you make a mistake that costs the business money. The business is the one who is at risk of losing that money. The chance of profit and all the risk is on the employer. Whereas in the case of the contractor, since they're being paid for a certain deliverable, if that deliverable is not met or they make a mistake and it's messed up, the business that's paying the contractor can say, you messed up, we're not paying you, and that's usually a clause in the contract. The risk in that case is on the contractor. And that would lead the CRA to believe, okay, yeah, you are assuming this risk and you are a contractor. I should also add, it is that risk that the contractor assumes, which is why they're allowed to write off items to conduct their self-employment income that an employee is not allowed to write off. That's the give and take there. You can take advantage of write-offs within reason. They have to actually be relative to the contract work you're doing. Who bears the risk in the arrangement will determine whether it's an employee or a contractor arrangement. The fourth factor that CRA looks at is dependence on the organization. If you are a contractor and you work with plenty of different businesses, you are not dependent on any one of those businesses for your livelihood. What they're looking for here is if someone is fully invested in one business and they're not open to other work anywhere else, that would imply that they are actually in an employment relationship, not a contractor one, because a contractor is working with lots of different people and they're not dependent on just one income. The final one, which is probably the hardest criteria to prove, is the intention of the parties. If the employer gives the contractor health benefits or vacation time or things that typically would come from employment at the company, then that can be turned around by the CRA or any tax authority and said, your intentions here are to treat them like an employee. You don't have to have all 5 to be one or the other. It's a blend of all of them that will make the tax authority say, no, you actually are an employee. You should have been paying employment income tax. A tricky one here is that there is such a thing also as a contract employee. You are an employee in the sense that you are having your payroll taxes deducted off of every pay and they are paying your taxes. So you are an employee, but it's for a fixed term contract. So you're an employee for a set amount of time as set out in a contract, but you are still an employee. That kind of complicates things because a contract employee is an employee, whereas an independent contractor is not an employee. So I hope that clears it up. Now I'm going to go into the IRS website because I'm not there all that often, but what I do see is it's the same type of deal as with the CRA. They're going to look at the evidence of control and independence. They use facts that provide evidence of the degree of control and independence fall into 3 categories. So for the IRS, they're looking at, does the company control or have the right to control what the worker does? So that's our CRA's control one. Financial, are the business aspects of the worker's job controlled by the payer? How they're paid, whether expenses are reimbursed, who provides the tools. So that's the financial. So it's a blend of a couple of those CRA criteria that I discussed previous. And then the type of relationship. So are there written contracts or employment type benefits? That they're getting pension plan, insurance, vacation. That again would fall into the intention of the parties rule for the CRA. Businesses must weigh all these factors when determining whether a worker is an employee or an independent contractor. Definitely look at the law in your country, look at the website of your tax authority and type in employee versus independent contractor and see what criteria they use. Ultimately, you can say you're a contractor all you want. If they come in and see that the criteria they're looking at all point towards you being an employee, you will be an employee and you will have to pay back the income tax. I don't know what other penalties will be involved with that, but you definitely want to make sure you're on the right side of this one. And it's common that companies want to keep people as contractors rather than employees because once you do have employees, there are extra taxes that the employer has to pay. This rough estimate, and this is in Canada, if you have an employee, you have to take about 30% above their base salary as extra for various pension benefits. It can vary by company, but it is an added cost for them to be an employee to you. Whereas with a contractor, there's no additional cost. The price is the set price. Employers may want you to be a contractor so they don't have to pay extra for you, but then you don't get to pay into certain benefits like EI. You can as an independent contractor, but I think it's a little more complicated and not a lot of people do it. In Canada, if you get fired as an independent contractor, you don't have the ability to collect employment insurance. That's a big one as well. So if you are in a situation where you're negotiating work terms with an employer, you need to assess what they're asking against the criteria to determine whether it's right that they should pay you as a contractor. If it does fit and they pay you as a contractor, you should be charging them more per hour than if they're giving you an employee job because you assume the risk, it's cheaper for them. You still want to make sure that it's on board and that the CRA or IRS isn't going to come in and get all y'all in trouble. So just make sure you're aware of those rules. And I have a blog post that highlights this and gives some more examples and talks about how I do think that the future of work is in contract work, but I think people need to understand this first. Thank you for joining me for my second podcast of Business Finance Made Simple. Hoping to get one of these out every couple of weeks, and I hope it was educational for you and that you have learned a lot. If you want to learn a lot from me, check out my program, Business Finance Made Simple. It is a course and community, one-time cost, and it's tax deductible to your business, and it gives you so much expertise and value for your business. Lots of templates, lots of just things so that you will understand your business's finances and you'll make better decisions for your business. So thanks for joining me, and I'll see you next time.